And it's not that hard to survive. If you don't do things that might actually kill you. And I'm speaking, I'm not, this isn't the holier than now. I've made an egregious several errors in my investing career exactly because of this.
You might have been looking at your portfolio and pulling your hair out and going, oh, like, what's coming? What's going to happen?
Please don't let me confuse you when I say this is one piece of 1,000 pieces. But I'm starting to look at this from the question.
Yeah, you're right. And I think that's really going to be the value of this investing community that we're building, because things are going to get ugly at some point. And like when everybody is feeling the pain along with you. Welcome to the Deep Investing Jungle with your host, Luke the Badger Hallard and Krzysztof Monkey Piekarski. This week, for every Spiffy pop, there is a Spiffy plop. Here's how to deal with the difficult red days. I looked at my reverse DCF spreadsheet last week. If you want to know what that is, check out episode 101. If you want to get the spreadsheet, go check out wallstreetwildlife.com because it's right there for all our Patreons. And as a result of doing that analysis, I rebalanced my portfolio, exiting a couple of stocks and trimming a bunch of others. Plus, I added to one. So we'll be chatting about those actions this episode.
Badge. Today's episode is going to be a little bit shorter because we've been delayed quite a lot because things blew up in your neck of the woods. What the hell? What the hell just happened? You were drinking the whiskey in your Tesla in the driveway? Like,
exactly,
why?
Exactly. Yeah, like this is me for the last 2 hours. Literally, as we're about to hit record, like I lost my home network. I'm like, oh, what's happened? I rebooted everything. It's still broken. And I'm like, what? Let me just message Krzysztof. And I'm like, my phone is down as well. What's happened? Like these two things should not be correlated. And I eventually realized, like, I've got Vodafone providing both my broadband for the house and my mobile phone. And they've just had like a massive UK outage. Yeah, and literally like live, it came back in the last 10 minutes. So I don't know if it's like a cyber attack on the UK or just Vodafone's incompetence.
Yeah, who knows? But immediately, as you might suspect, I thought, well, I hope Badger's safe and that there's no cyber criminals like carrying him off to a dark dungeon. But more importantly, ASTS, their satellites are now, there's all these photos of the big plane taking the big satellite over to India. And this is exactly the kind of things that won't be an issue in about a year's time. Vodafone being one of ASTS's main companion partners. And I also, side note, I'm thinking about getting the Apple Watch Ultra because of longer battery and, like it's a cool gadget. But, I didn't realize they have one of these functions where it shows you if you're out in the boonies, you could point your watch, toward the satellite and then be able to text and do stuff without any, Wi-Fi. So it's like a thing.
I am an ASTS shareholder. I hate to rag on it. But unfortunately, that wouldn't have helped me because ASTS are like an intermediary passing the traffic to Vodafone. And literally, Vodafone was completely down. Their websites were down. Like they had, like the channel of Vodafone had put for 2 hours. So yeah, if anything, it's in favor of Starlink because they're like completely independent.
I was wondering about that. I wonder what kind of backups. There's got to be some backup stuff. I don't know the engineering enough, but if all you have, I wonder. I would put an asterisk next to would that actually not would even the ASTS customers be out? I get what you're saying. It makes sense.
Anyway, it's a good lesson in single points of failure because I'm literally here. How do I even tell Krzysztof? I've got no way of communicating. I SMS'd you, but I was like, I had to phone the wife. She confirmed Vodafone was down. It wasn't just me being a nitwit. And then she emailed you and you got a freaking complicated surname. So
it had to be spelled right. Yeah. But I did get the SMS though. I thought to check it because, you weren't replying on WhatsApp.
Yeah.
But how did the SMS go through?
I think just their data seemed to be down. So they had like 4G, but no 5G and no data service. Anyway, it's done.
Okay.
We're back. I'm
Yeah. All right,
literally in
we're
my
back.
browser window. I've got like broadband deals and fiber deals. And I'm going to find myself a new home provider right now.
All right, Badge. I want to lead us off this week by talking about Monkey's first Spiffy Splat, or Spiffy flop or whatever. It was just, this past Friday, Monkey's King of the Jungle portfolio was down over 1,000 bananas, which is more than we started with, And I thought to write that post. I wrote on Saturday morning because everybody and their orangutan cousins, gets all uppity in your face with how well they're doing as investors when things are going well, correct? Everyone's a genius. But notice how quiet it gets when you have this big red day and everybody's buttholes are puckered and, it's just like unpleasant. It doesn't, as human beings, it's unpleasant to watch your money disappear.
Like it's not even a big down day. Like it was a down day, but it took us back, a few days in valuations. I think my portfolio rewound to like Tuesday.
Yeah, well, I have a part two to this, what I'm about to say, because I think it's more interesting than I think from my side so far. But anyway, I wrote that post because my intention was, one, transparency. That's kind of what me and you do. And we've been talking about this now for, ever since the bull market euphoria started getting a little toppy, that the reason we're building our community is so that when shit goes bad, people don't freak the out, pardon my language, and stay the course, because that is the most important thing, right? To not abandon ship. But when you lose, for some people, for the very first time, what seems to you like, all these magical gains, people do and will make awful decisions around this very point. So I just wanted to model like, yes, things go up, and then very next day, things can go back down and it's painful. So one of the ways of dealing with it I suppose, in writing that post, it's kind of therapeutic. I mean, our patrons, in the sense, they're not posting these long posts. That's our job. But just sitting at the computer, right, and going through the numbers and then pulling the graphics, it's like, yes, this is what happens in the market. And that's the, strong selling point of something like journaling and having a co-host to talk things through. So that just eases some of the emotional angst. And I think it's crucial. It's a simple point, but it's not an easy point.
Yeah, you're right. And I think that's really going to be the value of this investing community that we're building, because things are going to get ugly at some point. And like when everybody is feeling the pain along with you, but you've got some members of that community who've seen this story before. They've been through the downtime, they've been through the upturn. Like it's not that we're necessarily leading the way, but we can say with some conviction, like we've seen this before. And so hopefully that will help everybody stay the course as an investor, because you only really do yourself serious long-term damage if you were either like investing with money that you needed in a short period, like less than 5 years, or you panicked and you sold at the bottom. If it's money you don't need for like 10 years plus, well, you're just going to ride it out. Maybe going to add new money, and it's going to be like a really positive time in terms of long-term decisions.
Amen and hallelujah. So, Badge, I got a part two to the story that you're probably not aware of. So that day on Friday, I actually was by the computer quite a bit, and I was doing a lot of charting and more of the technical stuff. I mean, it was very wild day, and there was a lot for me to process, right? And I was just working, right? But it was tiring, right? It's tiring watching the market go down, 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 down. Okay, yeah, right. Okay, stop swaying, Murky. Okay. So anyway, my day ended and I went to meet a friend. And so that was good. Get outside, just have a normal conversation, let the down day pass. All good. Conversation ended, and I opened my phone, and what do I see? In my own personal portfolio, it dropped another very, very sizable amount post market close. And I'm like, what in the God's name? Right? And then that was the Trump tweet, and the market plummeted even further, right?
Yeah.
I was, dear God, it's one thing to get through a rough day on Friday, but you're like, cool, weekend's here, and then another double the loss afterwards. It was especially bad for me, Badge, because one of my very largest positions is Chainlink. And Chainlink is in the crypto world, even though it's not, the bad crypto. But crypto had the largest liquidation event in its history on Friday, right around the Trump tweet. So, couple of things about this. In hindsight, people who analyzed this saw that there was a massive whale that set themselves up short. It feels like some sort of, inside information thing, but, somebody always knows kind of thing. So they bet against Bitcoin. Bitcoin drops, tanks, and then they get out and they made some massive amount of money on the thing, like hundreds of millions of dollars or something huge. An advantage, I'm going somewhere specific with this. One advantage of crypto or blockchain is that everything is mathematical. So you get the truth, right? But a disadvantage of that, in a sense, is everything is mathematical. So unlike working with banks where there's delays and there's like humans involved and there's black boxes, if you get a margin call with a bank, sometimes that just takes, they're like, please deposit some money or this and this will happen. In the crypto world, it's automatic because there's no human interference in the sense. So as soon as this liquidity thing started, it got worse and worse because once, people get liquidated, more people get liquidated, right? And it was a complete disaster. So the technical term involved in this is called a perp. A perp is a perpetual futures contract. And in the world of crypto, I want our listeners to think this is exactly kind of like options in the stock market, where you're increasing your leverage in order to go long or short, but there's no expiration date. So that's why crypto people use this stuff. But again, like in the crypto world, once certain collateral levels are, let's call it, exceeded, then the math starts and the cascade starts. And because of the Trump tweet and the kind of like game theory, short bets, things cascaded to such an extent that in the aftermath of this, Badge, it became clear that a stunningly large number of crypto people were completely wiped out. So it was the biggest massacre ever.
So I know why, but go on, break down for us how how someone gets wiped out with something like that, because you think you should lose a bit of money.
Right, because if you're trading, so these perp things are collateralized loans. In other words, it's margins. Let's say you deposit $1,000, you buy this vehicle that says you can get 100x on this coin or this crypto token. And as long as the price of that token stays above your collateral, then you're fine. But as soon as it dips below that, then you're forced to sell. And in the crypto world, there is no arbitrage. There's no real time, right? But here's the tragic thing, because honestly, many people lost millions or hundreds of thousands or their life savings. There's a bunch of stuff about people potentially taking their own lives. I mean, it was absolutely devastating. The worst part was that even people who said to themselves, I'm playing it really safe and I'm not going crazy with either the amount or it would have to fall by, this massive amount for this ever to be triggered. And that's so highly unlikely. And lo and behold, right, it was sort of, it was, you could think of it a kind of attack on the system to see just how far it could bend and just how bad it could be. And for many people, it completely wiped them out. Here's my so when I looked at my phone and I saw Chainlink in some exchanges fell to $8 from 22 or whatever it was to 8. Chainlink is not, again, it's not a shitcoin. It's the future of the world's financial system, but because it's tied to this particular system, it fell 65% in like 5 minutes, right? And so I was looking at my phone and I just saw that. I'm like that's not like right. It was kind of like your outage, and of course it came back something like, I don't know, half an hour later. There was a V shape, but those people who were at the bottom of the V are dead. They're done. They're completely out of it. Here's the lesson. I was sitting there like wondering, like, are all the, like, how's any of this possible? And the only like, why am I not affected by it? And this isn't intended to be a holier than thou thing, but I never for a second thought I should use my Chainlink tokens to do anything but have them sit there in its own little account and, accrue value the long and hard way. And I have some of them staked with Chainlink Labs, which is, I'm getting interest payments in Link, but that's inside Chainlink's coffers. They're not being distributed on some weird exchanges. So in other words, I'm not playing around with my Chainlink. The people that got wiped out, it was because they were using leverage, even though they thought the leverage was safe. So
I wonder if we can just go a little bit deeper on that, because it's not a crypto or a Chainlink thing. It's just like a really good example of, yet again, why you should never use leverage, or if you do, very cautiously and really understand, because as you say, things can go, things can be worse than you expect. And let's just explain why it happens. Like, if, let's say you own $1,000 in Chainlink stock. Well, if it like gets decimated by 60% overnight, like within a few minutes, okay, you've lost like $600. Let's make the numbers bigger, right? Because this actually impacted people's lives. If you've got like $1 million in Chainlink, you just lost $600,000. But then if it's V-shaped recoveries and comes back to where it was, you're back where you started. So you've lost nothing. Like, you maybe, you panicked a bit momentarily, but hopefully you didn't do anything and you kind of got out by the skin of your teeth. If you had leverage, you might have had, let's say, for example, 10x leverage. So you might have had $100,000 with a 10x lever. So you actually, your $100,000 is kind of controlling $1 million worth of stock. In this case, Chainlink tokens, but could have been Bitcoin, could have been anything. And as soon as the market drops by 10%, but not even 60%, well, your $1 million exposure just went to zero. So if you're lucky, you'll get closed, you're closed out of that position and you literally have nothing. And when the market comes back, you have nothing to come back. So you've just wiped out your $100,000. If you're unlucky, and depending how you set it up, you might end up getting margin called. You might find you owe your broker more money and you have to start selling like uncorrelated, the quality stuff to pay it. And if you're really unlucky, you might have to mortgage your house because you've got this massive debt that you can't meet.
Here's the bottom line for me. I feel really awful for many people who, in one sense, were completely effed by the bad actors that basically precipitated this deliberately, right? I mean, my heart goes out to especially the people that lost, everything. That said, in the crypto space, since I'm the representative of this pod that follows that world, one, as I've said over and over again, stay away from the 99% of what crypto offers, because it's still a circus. Just do not go there. But even if you're holding something like Bitcoin or Chainlink, understand that these black swan events sometimes happen. That's the whole point. And because you already know that the system is still, young, and it's, the edges of innovation, and call it like the frontier, then by God, do not increase the risk by playing with leverage or margin. It's already crazy enough as it is. And there's an adage in the market. It's not how you do in the market, it's your time in the market. And you have to survive. And it's not that hard to survive if you don't do things that might actually kill you. And I'm speaking, this isn't a holier than thou. I've made an egregious several errors in my investing career exactly because of this. So that's why, I would never be tempted to play around the way, I was shocked at the massive numbers of people that were doing this kind of stuff in the crypto world. I'm like, are you insane? So anyway, I'm off my I'll get off my what's it called, soapbox. But sad day for many in the crypto world. But hopefully our listeners will learn a lot from that.
Yeah. Like let's bring it around to stocks, because on Friday and through the weekend, you might have been looking at your portfolio and pulling your hair out and going, oh, like, what's coming? What's going to happen? Are we going to go into like a protracted downturn? Is this like the end? And it seems like it's not. We've all had a respite yet again, and markets are back up, and, maybe we carry on for another few months, another few years, who knows? But if you felt like fear and pain, probably means you've got too much exposure and you want to de-risk your portfolio, because you've got a do-over now. Today is Monday, the 13th of October, and hopefully you've still got like that do-over when this episode goes live. So take some risk off the table. You don't have to sweat it.
Amen.
I took some risk off the table in my own investment portfolio last week. I've increased my cash allocation. Shall I tell you a little bit about that?
Yes, please. You were a busy little, I was going to say monkey, but you were, you were imitating monkey in your own badger-like way, which is very cute. It's very cute to see.
Badger. Badger's always busy. We don't have time to like drink daiquiris and swing by our tails. We're busy like foraging. Anyway, I did some foraging in my own portfolio, and so if you check out episode 101 last week's, it's nice being in the triple digits, isn't it? Like more feels material. In episode 101, I shared my reverse discounted cash flow spreadsheet template. If that sounds boring and tedious, it's actually pretty useful. And if you're a Patreon, or if you go swing by wallstreetwildlife.com, you can pick up that template yourself and you can use it. And there's a whole bunch of instructions there, and you can build your own reverse DCF. And it's a useful tool to have. One of many tools in like your toolbox as an investor. So having done that, I started looking at my own portfolio and I thought the same thing. Maybe I've got too much risk on the table. Maybe I've got some positions that I'm no longer tracking, no longer believe in. And, channeling Wise Monkey, you said about 10 episodes in response to one of our Patreon questions. Maybe, you got too many. I think it was Chris or one of our Patreons had like 60-something stocks in his portfolio. Your good advice was like, try and find a few candidates, 5 or 10 companies you're just not interested in anymore, not tracking, and just exit them from the portfolio. So I did a bit of that too. Let me take you through what I did. So what did I do? A bunch of things. I looked across the whole portfolio, and first of all, I had to take a decision I didn't really want to take, which was Rocket Lab. It had become my largest position, and in my retirement portfolio, all of these actions are, because that's the one that like funding my lifestyle, pretty important to me. And I had 16.75%, nearly a 17% allocation to Rocket Lab. My plan back in June was to like diamond hand this up to a 20% allocation, or until Tron was about to launch. But frankly, I ain't got the balls for it. So it got to an amount of real dollar money. I'm like, this is too much. So I was losing sleep. So I trimmed it. And I don't like to make big moves. So I trimmed it down to 14% last week. And then I have planned to trim it down to 10%, probably in 2 more tranches. And I'm going to do that sometime over the next couple of months.
Badge, can I say that one, thanks for the insight about your poker game. I mean, Monkey has some the big balls, maybe Monkey's gonna send some fear in Badger's eyes when we're sitting.
We're already playing pretty big stakes.
Yeah, okay. But two, I know it takes it feels good to do those little trims.
Yep.
Like it's scary at first, right? But then that evening you're like, oh, I'm glad I did that. Right?
I'm going to kick myself because immediately, obviously, Rocket Lab went up like 10% the day I trimmed. But, you got to make those no regrets decisions. And that was one of them. And I only trimmed a bit and I plan to trim more. So I'm still getting some of the back end of it. Anyway, I did some other things as well. I looked at the valuation for a whole bunch of my companies because I did that reverse DCF. So that was like a finger in the air valuation across the whole portfolio. And one that stood out to me was Axon Enterprise. I know I'm a big fan of this company, but the valuation is just unsustainable. And the company is paying themselves egregious levels of stock-based compensation. Like in this chart, you can see they paid out stock-based comp of over $500 million in the last rolling 12 months. And that's on revenues of like just over $2 billion. It's a lot of money going to insiders and not a lot left over for shareholders. I'm not surprised, right? This has always been the story for Axon, but on top of like slowing growth and a valuation that's really kind of out there, just became too much. So I've trimmed that back pretty materially, and I'm going to keep that to like a sub 2% position. I think it's now down to a 1.5%.
Badge, a point from me being an outsider on this. I see one of the most common investing mistakes around exactly this kind of thing, where you love the company and you confuse the fact that the company and the stock and the company and what you're trying to do as an investor are two very different things. And it's human nature to become attached. In the trading world, I mean, a little bit more in the short-term world, there's, inside jokes about, are you going to marry this one? Are you going to date, this one? Or is it a one night kind of thing? And that's all about, timing durations. But many, many long-term investors get stuck in this, I call it a mental trap, where you're like, well, I still love the company. They're making great products. They look at this new gadget and thing, and you completely lose sight. That's, you could love the company without, with owning half the shares. So I'm proud of you for making that cut.
Yeah, like I think it's definitely when I started thinking of myself as a professional investor, not like a guy who just follows a story. Like I love a good story, and I love like a mission, and I love good leadership, and like Axon's got all of those things. I really like what the company is doing. But if I'm really thinking of myself as a professional, I've got to manage to the numbers very hard. And the numbers are no bueno right now.
Yep. And also to your previous point about Rocket Lab, sometimes you will get egg on your face, and it does exactly what the universe is programmed to do, is make you look silly the moment you sell. But, a year from now, 2 years from now, 6 months from now, I doubt that this was a bad move on your end. So, props.
And then 2 other things I did in the portfolio. And by the way, like I wrote it took 2 days, Patreon post. And this stuff is like, it's on the Dolphin trading channel. And I did this as like a Dolphin exclusive post, but now I'm sharing it with everybody. Like on the Patreon, this is the kind of stuff that Krzysztof and I now do. Like we share in real time our thinking, what we're doing and why we're doing it. And we can debate it with our Patreons. So, having good conversations on there about this sort of stuff. I did 2 other things, and I think they're both interesting. I sold Airtel Africa, which is a stock I recommended for 7 investing about maybe about 3 years ago, and I've had it in my own portfolio. The thesis is intact. It's a solid company. It delivered like a nice 70% return, I think, in my investment portfolio. It's paying a good 2% dividend. The thesis was all about incredible demographics in sub-Saharan Africa, mobile money, and increasing connectivity. And I think that thesis is still solid and robust. But if I'm honest, I'm not tracking the stock. I'm not watching the company closely enough. I have to force myself to skim the quarterly deck. I can't remember the last time I listened to an earnings call for this one. So Natch, it's got to go from the portfolio. So I did that.
And you remember what the secret hack to these kinds of decisions is for me?
Keeping one share, that one.
No. Well, that's one of it. That it eases the stress, but it's more the question today: if you didn't own it, would you buy it?
Right.
My guess is you wouldn't.
Correct. Yeah, absolutely. And I did one other thing in the portfolio, which was I was ruining the fact that I had to sell one of my very few dividend stocks. So I looked for an opportunity to add to a dividend stock. And the one I picked was Novo Nordisk. Now, I bought that for the first time in April. I added again just in August, like a month and a half ago. But it seems like it's good value. My thesis is all about oral GLP-1s, like Wegovy in a pill, and they've got their pill form coming out but in Q4 this year. They're waiting for FDA approval, but it is expected. They are 3 to 6 months ahead of their competitor, Eli Lilly. In clinical trials, it looks like Novo Nordisk's pill form is better in terms of clinical results than the equivalent from Eli Lilly. So it seems like a winner. And the stock has taken a real bashing over the last year or so. And a lot of that was because they just didn't scale up their manufacturing in time. They didn't take full advantage of this unique opportunity they had when they launched the first set of injectable Wegovy. And they're ahead of that now. They're already scaling up manufacturing in anticipation of the FDA approval. So as long as they get FDA approval, that's the right thing to do. I feel pretty happy about this one. I've now doubled my exposure. It's a 1.5% position for me.
Cool. Good job.
Right. I was going to do a screen share and have a look at Novo Nordisk valuation live, but I think we're going to keep today's episode tight because we started super late thanks to Vodafone. So maybe we'll do that next week instead. And the other thing I have created that I'm going to release to Patreons today is a valuation cheat sheet. So I'll share that on a future podcast. But essentially, you and I are starting to think about how should investors use tools like Fiscal AI? How should they use some of the other technical trading tools you have in your toolbox? And we're going to start doing that stuff live on the podcast. I think we'll do it live on the Patreon first, and then it will hit the podcast too.
Yeah, that sounds good. Do you have anything more in terms of your trimming and buying with the retirement, or is that good?
That's probably good. I looked at a bunch of other things and I decided not to execute all of the other decisions I considered.
I, on the other hand, I don't know if this is a good time to show this, but a very, very high level way of playing around with Fiscal AI. I'm on a PayPal kick right now. And so I already bought 2 shares for King of the Jungle, and I even bought a call option, very risky call option that expires in March. So better than the Rocket Lab fiasco I got myself into last year, but it's still pretty tight because what I'm seeing is very, very compelling. But to really build up a position, you have to do hours and hours and hours and hours and hours of research. So I'm kind of in the middle of it, and Fiscal AI just makes this stuff so enjoyable and easy. I thought maybe we could share my screen and I could kind of walk you through 3 tabs of a couple of things I did. Does that sound good? So the very first thing when you get to Fiscal AI is you have the company overview. which is useful in many ways. For our purposes, when I get here and I see these valuation metrics, just from doing this a long time, I think, wow, these are really, really low. So, quick glance to help you see that. And I see here that they have $2.16 billion in net debt. So that's basically after you subtract the cash, that's the amount of debt they have on their balance sheet, which is why the enterprise value is $2 billion more than the market cap. Because if you were to buy this company, you would need to also take on the debt. And that matters because there's some debate about should PayPal be paying down its debt or doing something else with the money it's making. I'll talk about that in a second. But over here, I also like this because I could type in some of Badger's competition, the enemy, Wise, and let's put Adyen in here. And just like that, I have a nice comparison of the performance of the stock over 5 years. And so it's a good visual. It's one of these, one of 100 puzzle pieces. But if I'm investing in PayPal and I see it's down 66%, whereas its competitors are up in the similar time frame, I got to have a very good reason why I'm going to allocate my bananas now to seemingly the worst company, right?
And let me just jump in there, because a lot of beginner investors would look at that and they would go, oh, I should buy PayPal because it's down, it's going to come back. And I should be bearish on Wise and Adyen because they're up, when actually they're all down. And they're, up in comparison, because that kind of assumes reversion to the mean. And that ain't how the world works. Usually things are down because they're in a bad place and they're executing poorly. And if you're executing poorly, unless you take really material actions to turn that around, it's just going to get worse.
Yeah, exactly. So please don't let me confuse you when I say this is one piece of 1,000 pieces. But I'm starting to look at this from the question, is PayPal undervalued or is it a value trap? And here, this shows me, oh yeah, there's a good reason to think that it's underperforming. And usually you want to add to your winners. And in this case, obviously PayPal has not been winning. It's also very easy to switch this to something like market cap, where you could see relative to one another the size of these companies. And as soon as I switch that, I see that PayPal is over 7 times the size of Wise and about not quite twice as big as Adyen, but it's definitely the big behemoth in the space. So that's also noteworthy. Anyway,
you got some mixed currencies there, but directionally that's right.
Yeah. Oh, right. Because this is euros and this is pounds, right? But it's still directionally correct. Yeah. Okay. Anyway, it's a great overview. But then I click over to the financials, and this is where Fiscal AI really shines. And this is what I meant by my previous comment. What are they doing with their cash flow? And here, this is one of the most compelling metrics that I've seen about PayPal, because you could see that while their market cap has basically plummeted since the highs, and it's kind of traded sideways for now many years, during this time, the shares outstanding have been precipitously dropping. And this is one of these data points that tells me management is confident. Management themselves, the insiders themselves, are confident that the shares are undervalued, and it's a better use of their money to take off shares from the table than to pay down the debt. And this kind of steep curve is actually quite rare in my experience, where the market cap really goes sideways and then you could see the rate of change is just vastly different. This crossing doesn't mean anything exactly, but in all the years doing this, I know a stock could remain undervalued and this spring-like thing keeps compressing and compressing until overnight, seemingly, it pops. I remember this happening bad with Microsoft, with Activision, where, I was looking at the finances and it's like, why isn't this going up? Eventually, if the thesis is right, it does. And so last point that I want to show, I'm just going through these tabs here. You get to investor relations and they have compiled all in one space, all the latest, info. This is the stuff where you're really digging in the weeds. And Alex Chris is this hotshot CEO that took over from the previous management team that were vastly underperforming. And I'm scrolling, reading, and bam, I get this quote. On pay with Venmo, we're seeing 45% plus growth with pay with Venmo. I think we're just getting started in terms of merchant adoption and really igniting consumer there. With buy now, pay later, we're growing greater than 20%, so on and so forth. And the whole, at this point, I'm many hours deep in research. I could tell you that the thesis statement on PayPal, or the bear statement, is, so, okay, it's this big, massive company, but they're no longer growing. So it's more likely a value trap from the bear perspective. But when the CEO gives me numbers like this, which in theory, even if they didn't grow with all the share buybacks, that could still make for a good investment from these cheap levels. But when I'm seeing these double-digit growth numbers in some categories, not all, but they're also expanding in vast number of categories, all of a sudden I'm getting a very clear picture that this is where I need to do more work and look very, very carefully, because I smell a serious opportunity coming. So that's just like a quick example of, a very nice workflow of how I use Fiscal AI. And there's just so much more here that, we're not even scratching the surface of. But it's just easy, right? That's, I think, what makes this tool great. It's easy. It's all right there for you. One screen, one platform. And these visuals, maybe last comment, if I go back to the financials without overdoing it, what I love about a picture like this is it's two data points. It's not complicated, and it tells a very powerful story, which is what visuals are intended to do. So,
good job. Very good. We're going to start using Fiscal AI more regularly on the podcast, live, like Krzysztof just did. And if you want to sign up and check it out yourself, go check out fiscal.ai/wildlife for a handsome discount.
Amen. And it just occurred to me, Badge, for better or worse, I smell another bet, Wall Street Wildlife bet cooking, because we have two. We have the annual, who wins the year's return and the king of the jungle. We also have the Axon versus EOS bet, which ain't looking too hot for you today, unfortunately, after EOS popped another 25%. And actually, EOS has now joined Rocket Lab in my first 10x, our second Wall Street Wildlife 10x. So, but the next bet, obviously, is going to be, if my research validates what I think I'm seeing with PayPal, I'm going to push PayPal chips all in, and you get to pick Wise or one of your other fintechs, and we'll go head to head in something like that. So I'll give you some time to prep, to think it through, but that's what I'm smelling.
All right. I like it. Yeah, I'm down for that bet. That'd be fun. And we do have another bet as well, and it's not going to settle for another 2 weeks. I bet that your overall portfolio would be up more than 500% in year 2 of the King of the Jungle. We've got a bottle of vintage rum on that. How am I looking?
How is it, side note, how is it that every time you and I bet, it seems like I win, but you get the like those EOS calls right now that you as a loser are now up, whatever.
Well, let's park on that, right? Because we had a bet on something else, I forget. And the loser had to pick like $1,000 option for the other, or like a stock, an investment for the other. And I lost that bet, forget what it was. And you told me I had to spend my $1,000 on an EOS call option. And yeah, good job. It's worth $5,000 now. I'll take that.
Yes. And I'm the one buying you the rum. That's what I'm saying. This this world, it's a fixed game. It's a rigged game, Badge. To your point, this is nuts, man. Last November 24th, after year one of King of the Jungle, Monkey's portfolio was at a underwhelming 1,600 bananas. As of our recording right now, it's at 15,636.
Wow.
For a gain of 877%.
That's a case of rum. I'm going to ask you a question on the podcast I asked you privately like a month or two ago.
Yeah.
800% gain. How
877.
Yeah, like that's like a 9-bagger on your whole portfolio in King of the Jungle.
Yeah.
Like, how come you're still working?
Yeah, and I encouraged you to ask me this because forgive the upcoming philosophical rant, but I think this is important. Money is not the point of life. The point of life is how you choose to live it. And my job, what I call my job, is teaching young college students. And there are few things on this planet that give me more intrinsic satisfaction than showing up in the classroom and teaching my philosophy of Zen course and my what I think of as how to think better courses in the spring. And so it's one of those things where even if I don't have to work, I feel honored and privileged that I get to do that work. The bonus is that I made a decision. I don't need to work full time. So as soon as there's a threshold where they make you start going to all the meetings and all the admin stuff, I'm like, no, thank you. So I'm exactly at the kind of course load where I get the insurance, I get the benefits, I get to teach, and then no more. And that's because I can. And of course, I could also leave, so I go to Sicily and, all these things. So it's you and I agree on this through and through. Time is the gift of being a great investor. And right now I'm choosing to spend it the way I want.
Great. Like that, I think the technical term for that is FU money. Like once you've got FU money, you can say FU to any opportunity that comes along and just pick and choose the stuff you want to do. And having agency over your time, that's been like such a change for me in the last 4 or 5 years.
Yeah. Now, to be fair and transparent, I am not at your level because as a professional, I've been in the education business all my life. I never made big bank ever.
You do.
In fact,
if you
worse
do
than
like,
that.
You do like 877 again next year, you'll surpass.
Yeah, then we'll be, fingers crossed, right? But actually, it's worse than that. I was a graduate student for 8 years. As a graduate student, I was not making any money. That's the vast majority of my 20s. I was not putting away anything substantial. I was investing, but like when the capital base is tiny, that's nothing to write home about. And yet, I mean, this is not me thumping my chest. This is even educators like me. If you play the long game and you do this for long enough, you will have FU money if you follow the principles. So, you retired, you did both things. You had a good professional career, you invested wisely, and then, now you're legitimately playing with FU money. I need a couple more years to catch up, but,
Keep going. I want to see you turn your King of the Jungle portfolio into like $100,000. That'd be awesome.
Yeah, that'd be pretty sweet.
Yeah, because
especially for
you have turned now. It was $100 a month, and now for the last 10 months, $200 a month. And we're not even 2 years in, and you've turned that into $15,000. That's actually a material amount of money.
Right. Nobody could sneeze. Right. Nobody could sneeze at like, oh, 15K. Like,
yeah.
But actually, it's worse than that. I was a graduate student for 8 years. As a graduate student, I was not making any money. That's the vast majority of my 20s. I was not putting away anything substantial. I was investing, but like when the capital base is tiny, that's nothing to write home about. And yet, I mean, this is not me thumping my chest. This is even educators like me. If you play the long game and you do this for long enough, you will have FU money if you follow the principles. So, you retired, you did both things. You had a good professional career, you invested wisely, and then, now you're legitimately playing with FU money. I need a couple more years to catch up, but,
All right. Very good. Well done. Hey, who isn't having such a great financial time of it, potentially right now, but maybe they're going to be happy when award season comes around? Warner Brothers, with one battle after another. I know it was a critic's favorite, and it was a Krzysztof favorite. My buddy Tom didn't like it, and it looked like the audiences aren't either, because it doesn't look like they're going to reach $300 million break even they need.
it doesn't surprise me, I suppose. I think that movie is too smart and too also, well, I don't know, movie, when garbage, makes trillions of dollars, in beautiful art films, sometimes, don't even see the light of day. That's not surprising. We're in a cultural disaster zone. But did you see it?
I have not had a chance to, sorry.
Yeah. The only other thing to note is that it's highly political. I mean, it's basically a snapshot of the United States or the world, and it depicts left fighting the right, and it has its own subjective viewpoints. I think it does a fantastic job of taking the piss out of both ideologies, and leaves us with something extraordinarily rich and nuanced in the middle, so to speak. I'm not ruining anything by saying that, but not everybody wants to go, and think hard about, this is what it looks like and feels like to be in this entangled mess. Yeah,
I should check it out. I'll try and make sure I watch that before I watch Tron Ares, which has been panned with absolute garbage, but I kind of want to see it.
Yes, please do watch one battle after another. It's just so brilliant. In fact, I think I might see it for the second time in the theaters, which I've never done before for any movie.
Oh, wow.
Ever.
Okay. Yeah, that's cool. I've done that twice with Pulp Fiction and The Matrix, both of which I went to see and had to go and immediately watch the very next day because my brain was so blown by both of them.
Oh, yeah. Yeah, for sure. Yeah. Right on. I'd love to hear what our jungle crew has to say about any three of those movies. So that's why we have our Watering Hole channel. So to any of you listening, if you've watched those movies or you had some sort of life-altering experience at the cinema, please let us know. We'd love to hear from you.
Great stuff. Like the Jared Leto Tron Ares fans will come out of the wardrobe.
All right, Badge. Well, I'm glad that you were not cyber attacked and whisked off into some dark lair by some black hoodie digital monsters.
Yeah.
So
I mean, maybe that's happened to Vodafone. It remains to be seen. But I'll definitely be pulling some of my business from them. So I haven't got that single point of failure. I will say that we were going to try and keep today's episode tight, and we still managed to chat for an hour. There's just so much to talk about. But we have got confident enough with our editing workflow. Thank you to our glorious editors and their support. We're bringing the podcast forwards. So you might have noticed that episode 101 drops a little bit earlier. We're now going to aim to get the podcast out on the YouTubes and on the Spotify's every Sunday. And we're also bringing it forward on the Patreon. So you can get early review, and we're going to get it out every Friday. So if you want to see the pod 2 days early, go sign up at wallstreetwildlife.com.
Badge, are you ready to become a beast of an investor?
I am. You can get it right here.
A reminder that the people on this program may hold positions in the companies that are mentioned. Buying and selling stock carries financial risk, which could include loss of capital. The views in this program should not be taken as personalized advice. Before acting on any of the information provided, listeners are encouraged to consult a financial or tax professional.